this is my very first weekend breakdown video that I'm doing. So yeah, I'm just going through the markets and what I have on my top six and what I have in my additionals. Looking over what I'm going to be the pairs I'm going to be looking at over the next week. Yeah, so starting with the DXY. It's a little bit messy at the moment with the price action from last week. Again, the main target is for price to reach into these highs here, and then obviously we look for the sells. But on the shorter term, I kind of see that we form this sort of larger continuation after this impulse up. We failed to form any sort of continuation after that to move higher, and we've kind of just sold off. We had this big 4-hour close with a wick, and now it's kind of just in this potential state of see this happening where it comes up, taps into this, and then sells off. There's quite a few things going on with it at the moment, but I think either way it needs a little bit of time to sort of adjust and just get its foot in. Because I think if I'm looking for anything for the sells on the DXY, which would obviously mean euro dollar, pound dollar, you'd be looking for the longs. I'd want to see how it reacts to tapping into this area, which would be kind of like the override to this larger channel. And obviously, if we get into this area, but if we do happen to break above those areas, then obviously I will be looking for the longs on the DXY, which means short on euro dollar into those highs. So have a quick look at the 15-minute. Yeah, you can kind of see here that we had this sort of expanding structure that formed like that, and it's kind of sold off, and then we could see price kind of come back down. You get this sort of scooping double bottom, push up flag. I'm not super interested in taking something like that, but I get yes, it is an option if it does form. It's just much higher risk. Onto the pairs that I haven't watched for this week. So Aussie CAD is one of my favourites. It's quite a different approach. So obviously we have this high over here that we near missed once, twice, and now potentially a third time. We've broken this high just about, but we did it in this expanding 3-touch structure. So obviously last week was looking for potential shorts on Aussie CAD. But in the end, we didn't actually fulfill any of that. Price didn't look like it was. This doesn't look like typical short behavior. It looks like it's now just creating this larger continuation to move higher, and then you've got your 1, 2, 3 to take out this high, which would be great. So how can I play that? Well, what I'm looking for is we have the back end of this high, which is just below that wick, and I can see here we've got our tops in like so, and I'm just gonna put it like that. You can do it either way, where you've got it like this. But essentially, all I'm looking for is for price to come down, fill that wick, tap into that area, a little push, a flag, maybe a little bit more of a push, something like that, and then for price to move higher, and then I'll be in there. Probably be able to get in with a 10 pip stop, reduce this kind of trade. Yep. And then obviously you get what 5 to 1 to that high, 9 to 1 to that high. So it's a good position to play. It's kind of one that I feel like a few people might miss because they're so honed into looking for the short with the bias because of the area that we're in and the structure that we have. But I think when price has got an impulse this large and you get a continuation at the highs, I've seen it multiple times, and I've missed positions like this multiple times. So I'm becoming more and more aware of them. That you will find that price doesn't actually sell off, and we actually move higher. But of course, if we do, we can definitely play that as well, right? So if price doesn't reject off this little double bottom, and we break through and then form continuation, and it just so happens to be retesting the back end of that, and you've got your 1, 2, 3, then of course you'd be looking for a risk entry within there, and you'd be shorting that because the market is now giving you a sign. this doesn't. It's no longer a bullish structure, and we're not looking for the long because we've broken out of the structure and we're now trading below this high and below the structure. So it makes a lot of sense to then look for the short. But yeah, so that's Aussie CAD. Euro Aussies had it on last week. It's one of my favorite pairs this week. It's probably one of the easier ones to look at as well, because obviously we've had all of this volume built up. We're trading below this low. We're trading. We tapped into this low, but obviously this isn't like a super significant area. Obviously the area that we want to reach is the low. And then also on the I'll come back to the 4 hour. But you can see price. All it's done is broke above that high, pushed up, pushed back down, gave us that first continuation, pushed down. Now we're just in a larger state of continuation. And when you go back to the 4 hour, you can just see here that we had this strong bearish 4 hour that pretty much almost retraced the two previous 4 hour bullish candles, which is a really good sign because it's just getting people caught on the wrong side of the market, which is exactly what you want to see in situations like this, because people are then they're less likely to see what's actually happening in the market. So in terms of the entry, well, it's quite simple, to be honest. We have that hook point, we've got a tiny near miss to it, so I'm just looking for price to come up, either break or tag that area, little push back down, flag, and continuation underneath, and you'd be in with a 10 pip stop, easy, and then you've got just to the low, you've got almost 4 to 1 to the low, and then down to there, you've got a 10 to 1. So you could probably do the mechanical management on that, and you'd be looking for you'd be maybe around there for about 8%. Yeah, lovely position. I got Euro Kiwi on, more of as an interesting one. I put it in my top 6, but it could potentially be swapped out for another pair, like Aussie dollar. But this is my thesis behind Euro Kiwi. I saw this as we had this massive impulse up, with clearly in this state of continuation to move higher, to take it as higher. But obviously we don't know when we're going to get that push up, right? And that push up could be very impulsive, or it could be more corrective, where it's still a direct move, but on the lower time frames it's a lot more corrective, so it takes a longer time. Sorry. So what was I looking at on the lower time frame? Well, I said to myself, what's actually happened here? So I go back to the 4 hour, sorry. I was like, we've got these lows here, and if we want to be a little bit more accurate, we've got it exactly like that. But we haven't really we have filled it, but obviously we've failed to move higher, right? And we can see that, it's quite obvious. So I saw this as a larger expanding structure, where potentially last week, based on this low, you could have been looking for the long, but we didn't get it. Price is now it looks like it's slowly scooping round for the double bottom. So I was like, okay, what if I look into this price action here? What can I see? Well, I started to pattern separate, and I could see, well, simply we've had this little high here, we've near missed it once, twice, and then we broke above. So there you've got your little 1, 2, 3. Not the best 1, 2, 3. Probably wouldn't want to trade that. But yes, that's fine. It's sold off. And then what's it done? Then it's created another little high just there that we've just tapped into. So when I dropped down to the 15-minute, I was like, oh, okay. Well, I wonder if we get something like this. If we get a little 1, 2, 3, and you can even argue that you've got that little hook point that price could tap into. Again, negligible. But if we form a structure like that, it's just a corrective wave where you've got structure into structure. It is high risk, I will admit that. Obviously you wouldn't be looking for a risk entry in this area, but if we get something like this, and then you get the push down, and you're about 50% of the way through, you've had a solid 1 hour rejection from that area, and you can get in, even if you get in with the reduced risk, you're probably looking at about 12%. So that gives you almost 6 to 1 to the low. But if you get in with a risk entry within there, and you may be getting with a 10 pip stop, you then got 7.6 to the low. So the short isn't my main focus for this pair. But my idea was you could play the short with this 1, 2, 3 here into this descending channel, which just so happens to line up with the lower trend line for the long. So you could play this down like that, you get the push up, continuation. So you've got short, you're out for maybe 4 or 5%. Price pushes up, you get continuation, and then you can counterplay the long. On the 15-minute, you'd probably be looking for a risk entry within there, something like that, and then just to the high up there, you've got 6%. So I was like, that makes a lot of sense to me on why I would take this position. I couldn't really see much downside to it, because on the higher time frame as well, it does look like it's just in a larger state of continuation where you've got this impulse correction, and then you're looking for that impulse to break this high and take into these highs. And when we measure that from top to bottom, and we do it from there, it perfectly lines up with that area. So it mathematically makes a lot of sense as well. So that's why Euro-Kiwi is on watch for me. Pound Aussie, again, another really, really nice one. It's quite a simple one, to be fair. We've had all this volume. We're clearly trading well below it now, even below that low that you'll see on the 4 hour. Yeah, so we're below this low here. Obviously a nice little tap into to retest the back end of that low would be really nice. I'm looking for two options really. Not super keen on this one, just because of where the first touch is. But obviously I will look for that. And then alternatively, our other option would be price just slowly comes up, and then we tag into it, and then we get our continuation like so, a little bit further down. Then you'd be looking for ideally a risk entry within the flag, because it's on the 1 hour. And yeah, if you can get in with let's say a 15 pip start, that's quite tight on Pound Aussie. Yeah, getting with a 15 pip start, you're looking at, let's say we're about here instead, so that flag's a bit lower. You're looking at, yeah, almost 7% to the low, so it's a really, really nice position. We've got the impulse, we're just in that larger state of continuation, trading below the low. Lovely to, if we can get a little retest at the back end of that low, below all of this volume, and now we're just looking to see if we can play price down to there. If this is aggressive as some of these moves up here, it's going to be an absolute baller of a trade, absolutely massive position. Dollar CAD's looking really nice as well. You can see here that we've got this larger correction here. This larger correction. Obviously, we were looking for shorts over here potentially, because obviously we had that impulse tap, we had the little hook point, failed to form any sort of continuation down to the downside. What we've done is broke above, and now we're in this larger state of continuation. We've near missed this high, and this high, near missed that high. So obviously that's what we're looking to play. And then when we drop down to the 4, you can see we've had this 1, 2, 3 failed to form. Again, there wasn't an entry within this continuation, and then obviously we failed to commit to the upside to fill those gaps. So what am I looking for now? Well, there's two things that I'm looking for right now. One is high risk, one is lower risk. The higher risk one would be an entry off the back of this low, now that we've pushed up. But it would have to be very, very key. It would have to be a very, very obvious flag, because the momentum isn't massive. But I'd be looking for something like that. Now, it's not the best entry, knowing that the fact that we have this as our double bottom. A little bit better. And then obviously my preferred position on the 1 hour would be price fails to fill that. We just get the push down, and then we continue, break that low, and then we get that continuation to the upside like so. and then obviously you'd be looking for, on the 15-minute, more of a risk entry within that structure for a better 10 pip stop, and then just to that height there, you've got 13%. So absolute amazing trade, lovely position. And then I've got US oil that I bought in on watch this week. What I liked about this one is obviously we're clearly now trending to the downside after sort of potentially rejecting off this. It's just we're in full swing now. Like we've had, you know, you can kind of see you've got this continuation here that we've just tapped above, and now you know we've pushed down, ignoring this little bit of volatility here. But we've created that first continuation. We've pushed down, and what's really nice now is we're trading well below both of these continuations here, like the head and shoulder that you can see there. We're trading well below now. So it's kind of like the floodgates are open as such to trade prices back down into these, down into this, potentially down into 67. But so what I'll be looking for in the entry, quite simple one to be fair. It's quite nice because you can see we've got the hook point, we've near missed it, price has filled that, but near missed that hook point, and then all it's done is failed to form, broke above the high, and then boom, trading below that low. And on the 15-minute, you can see exactly what I'm looking for. We're just looking for that 1, 2, 3 risk entry at the third touch. You can get in quite tight. This is a 20 pip. It still gives you, what's that, 2% to the low, and then obviously down to these lows you're looking at about 8%. So really nice position. It seems like this week there's quite a few positions that can play out quite, in these shorter term moves. So because obviously price moving from there down to this low, it's not a huge move. We can see that it already did it last week with these 3 1-hour candles, and you're looking at 6 to 8%, and it seems like that's because of the pairs that are on watch this week with the the Euro Aussie, Pound Aussie, Euro Kiwi, with the tighter stop losses. Some of these smaller moves are going to give you a much greater reward, but it's obviously making sure that you're composed and you're not taking super high risk entries unless you can afford them, and you're just not being silly in the market. But yeah, so onto Aussie dollar. So this is my additionals now. I've got 6 additionals, quite a few interesting ones. Sugar, US 30, and I got wheat in there as well. I've got like a super wild card. The reason I chose Aussie dollar over like pound dollar and euro dollar was just because it had like a very obvious high that price is looking to trade into, and I could see here that we kind of had this like 1, 2, 3, and we'd failed to form any sort of continuation here, and I'm just seeing this as like we've had our first near miss, our second near miss, and our third near miss. So the likelihood that this then moves up early next week and we tap into that and then get continuation down was my thought, and that's why I kind of preferred it over euro dollar, because euro dollar was just looking a little bit too messy to me. I couldn't really, it was like, for me, I felt like I was kind of forcing it to be on just because it's euro dollar. So that's why I made the decision to swap for Aussie dollar. Any position on the long? Well, I was potentially looking like we've tapped into this low here. We've pushed up, and then you can kind of see that we've got this 1, 2, 3 structure, which again you could have taken for the long last week. It's not the best position in the world. You probably would have been out for a manual break even. But the risk reward was there to fill the high. You're looking at 6.5%, so it wasn't the worst. But now that you could be looking for this double bottom. But personally, given where we are and given the DXY, and it's a little bit messy, it's not 100% clear on the direction that you're looking for, I will personally be looking for price to move into these highs before I look for the short. So yeah, and Pound Kiwi. Pound Kiwi is a interesting one. It's a high risk one for sure. So price, you can see, is trading now below these lows, which is a bit more obvious on 4 hour. So we can see we're well below that now. And then we've got that there. So what I'm looking for here, what my thesis was, is obviously we've correctively been moving out. And you've got this correction here, but then you can kind of start to see that it does start to make a little bit of structure. And I can see here that we've got this kind of 1, 2, 3 touch flag. Price then breaks out of that flag. And then you get this kind of like 2 touch running channel here. Obviously not the greatest running channel, and then you get this tiny little flag here, and then obviously we sell off. But then we've come back. And then my thought was, well, if I just remove all of that now, I'm looking at this kind of these 2 little areas as a potential hook point. So if price does then pull back into that area with a 1, 2, 3, and then we get the push down, and we get that flag, then I will be looking for this, because it's become its obvious structure at the end of a corrective wave. And you know, we know that when you get these corrective waves, when you get this, you know, obvious structure at the end of a corrective wave, but they're completely different between the two. Like, you can see the difference. These tend to drop out quite heavily. So I'd be looking for a potential risk entry within there. Probably go for a 15 pip start. That gives you a 5 to 1 to the low there, and then down to there you've got a 10 to 1. And again, that's a nothing move. As you can see here with these impulsive runs, when it drops out, you should sorry. As you can see with these impulsive runs, you can fill this move down to this low within a matter of hours. So yeah, that's pen kiwi for me. Sugar, I just added on because I want to keep track of it. It's not so much that I'm going to be taking a position on it, it's just more for me to watch and learn from it. But if we start from the daily, what I liked about it was we clearly impulsively moved to the downside, and we're kind of trading mainly below / through this previous low. And you can see here, it's better on the 1 hour when I break it apart. You can see we've had this 1, 2, 3. We failed to kind of move to the downside really, and all we've done is this has just become like a larger sort of hook point, I should say. And then you've got this 1, 2, 3. All we've done is tapped into that little hook point and then sold off. And now it's kind of, I'm not so much looking to trade it. I just want to see what price does in this area to see if we form continuation to move lower to fill this, or whether it's gonna turn around and it becomes a larger continuation sort of thing. But yeah, it's not so much of like I'm gonna trade it. It's just, you know, I was just gonna be left with the 5 on watch rather than 6, which is fine. I just wanted to add it in just to see what happens really. US 30 looking super nice. Indices across the board looking really bullish. If you go to the weekly, you can see like we've got such good momentum. Even on the monthly, it's looking really good for that, for the buys. If anyone wants to do that, I'm not looking at the buys. I am focusing on 2 key areas. First area, second area. I want to see how price reacts to this area here. If we drop down to the 1 hour, we got our first hook point, and then we've got our high. So if price just breaks below and we get continuation, that is a sign from the market. We're trading below that low. We've tapped into a key area where we've sold off aggressively last time. I will look for continuation below that low, 100%. Alternatively, if we don't, we have this tiny little one here. That's, you know, so I know price can push up a little bit higher, and then we get the break. Again, I'll be looking for the short. And then finally, it's if we don't get that, and if we do form some sort of bullish continuation, then I will be looking to trade it from these highs. It's as simple as that. It's very easy on US 30. And then sorry about that. And then dollar yen, definitely high risk, definitely an interesting one, because we've got this high over here. which is one of our highest highs. We got this hook point just above as well. But when you drop down the lower time frames, you do see that we've near missed it, and we've near missed it with a wick. And then I went to the weekly, and I could see, okay, we're very bullish on the weekly. We've retraced the previous body of the candle. The daily, we've had 3 momentous candles there, decent sized, and we still haven't tapped above, well, broke above that little hook point on the 1 hour. You can see on the 4 hours, it's clear on the 1 hour. So I was like, is there a potential long in there? So I was looking at this, and it's kind of more of a 2-touch play, because I mean, you could argue, you could argue maybe you've got a first touch here where it's like on the 15-minute, but I would see this more as a 2-touch play. But all I'm waiting for is to see if price comes back into that area, and then we get like if we get like a nice 1 hour bullish rejection off this low into a 15-minute continuation. I will be looking at for that for the long, because you can see you've got the momentum there. Again, the sequence is not very good. The positioning isn't the best, so that's why it's a much higher risk position. But if you do get in and you can mitigate your risk, and you've got the continuation, which does mitigate some of the risk, it's a very obvious 2-touch flank. You've kind of got your middle section here. So if we get a little bit of aggressive push down there, we get a retrace, 15-minute continuation here, and you can get in with a risk entry, and you get in with a 15 pip stop. You can easily manage to the high of the structure, gives you about 3 to 1, yep. And then to there, you've got 5 to 1, and obviously if it breaks out and we start moving higher, then you're in a good position, because the next high you're looking at 16%. So, and look at that can happen within a week. So you could be, so that's why it's on watch for me. And then finally, wheat, just a larger additional, to be fair, just because we're moving so bullishly, and we've got the hook point that you can see on the daily as well, which is nice. But yeah, so we've got this area to the left, and now it's just kind of seeing, I mean, and you can see these, you've kind of got this overall structure as we're leading up to it. So yeah, all I'm doing now is just waiting to see how price taps into there. If we tap above, push back below, and we get like an hourly continuation that we can filter onto the 15-minute, then yeah, 100% I will be looking for that position. No brainer. So yeah, that's it for me. Aussie CAD looking for the longs unless we break. Short. Euro Aussie, sorry, looking for the shorts. Euro Kiwi, potential short-term short into the long. Pound Aussie looking for the shorts. Dollar CAD looking for the longs. Oil looking for the shorts. Aussie dollar looking for the shorts from up there. Pound Kiwi looking from the shorts. Now we're trading below that in this corrective wave. Sugar, just keeping an eye on it, seeing what happens. US 30 looking for the shorts from here or the higher above. Dollar yen looking for the longs if we get that continuation within the flag, and wheat looking for the shorts from the hook point on the daily. So that's it. Thank you very much.